Hang on. Right, we're live. Hi, good afternoon everybody, and welcome back. We're here live at Transform Finance's 4th annual FinCrime Leaders Summit here in New York. I'm Jane Blakeway, co-founder for Transform Finance, and I'm here today with my co-host, Una Vandenberg.
Hello.
Who is CEO and founder of Raw Compliance, and we have a very special guest with us this afternoon. So welcome to Brendan Leddy, who is first VP for Global AML and Sanctions for United Nations Federal Credit Union. So welcome.
Thank you very much. Thanks for having me.
We're also welcoming Brendan later today. He'll be on the main stage at the event as well, so that's not to be missed. So
that's it for that.
That's it. That's the end of that. So we're here. Yeah. So just kicking off, maybe we can talk a little bit about your roles. I'm sure people who are listening in would be interested in terms of how your roles have evolved over the recent years, let's say, and what distinct risk profiles do credit unions face, perhaps compared to traditional banks.
And if I could ask as well, just as an interlude, kind of as an introduction. Obviously, this is a very specific kind of United Nations event. Could you talk a little bit about what it does and its capacity as part of the UN? That's something that I wasn't really familiar with.
Sure. Let me start with that. So the United Nations Federal Credit Union, we basically serve the people who serve the world. So we're sponsored by the United Nations, and we are the Federal Credit Union, if you like, providing financial services to humanitarian workers, aid workers, UN personnel on a global basis. To get to the point, I suppose, about how things have changed over the years, I've been doing this nearly 25 years. And so when I first started, it was a very manual process. AML was very much about, following the money. It was a tick box exercise. And we were sort of thrown into the corner of a floor in a building. We weren't really at the forefront of what was taking place within the financial institution. Whereas what I see now is we're at the forefront of what's happening in the organization. We're part, if you like, of the strategic planning. We're part of the team, if you like, that protects the reputation of the financial institution. And from an AML sanctions perspective, one is about following the money, and on the sanctions side, it's about stopping it. So I think just in terms of the responsibility with respect to the role, I think it's become more systemically important within the organization.
Okay, that makes sense, And in terms of sanctions and AML convergence, I think that was an area we wanted to touch on as well, with sanctions risk escalating globally. In your view, what are the biggest challenges of combining AML and sanctions operations effectively, and how has that changed the required skill sets and tools?
I think anti-money laundering, I suppose, as I said, is very much about following the money. Mm-hmm. So if you like, it's about trying to understand a particular transaction. It's if you like, an investigative type role. On the sanction side, traditionally going back a few years, it was very much a preventative role. So if you like, it was about name screening, and it was about looking at specific individuals and seeing if it hit against a specific list. So on the one side, you had just the behavior, which is investigative on the AML side, and then the convergence, if you like, on the sanction side, which is more around preventative. So it's almost like, how has it changed? More recently, these kind of roles have actually come together because the skill set that you require now is one of, again, it's behavior. You're looking at following the money, you're looking at investigating and detecting, but then on the other side, you're looking at preventing and protecting. So I think historically they would have sat as silos, whereas there's a little bit more of togetherness with respect to that. And of course, it's also tying in other areas within your organization, whether it's fraud, cybersecurity. It's almost like a lot of these different departments are pulling together. They all have, a similar goal in terms of protecting the customer or the member or the organization itself.
Absolutely.
It's always been interesting for me, whenever I started in kind of regulatory product compliance before I kind of moved over into the financial crime side. The reason why I didn't start the financial crime side was it didn't used to be sexy. It didn't used to be fun. It was kind of the team in the corner that nobody spoke to, and we occasionally invited for drinks, but not all the time. It was a transformation back kind of in 2012, 2013 globally, where we really began to crack down. And one of the things that was my immediate observation was the fragmentation, as you rightly stated, of the underlying function. So financial crime is an umbrella for money laundering, terrorist financing, data protection, cybersecurity, corruption and bribery and corruption. but yet all of these respective risks sit in different areas of the bank, and never shall the two speak, and never shall the data correlate together, and that is the massive change right now in modern day financial scams, is that they are now basically a melting pot of subsets of all of this. We've cybersecurity issues where somebody is being scammed, let's say through an investment scam, and their phone has been accessed via AnyDesk and is being used to transfer out funds. And the fraud team should have picked up the alert, but they didn't. So then it falls back to the transaction monitoring team. And it's just, and we have all of this data on our customers over many, many years, in some instances 60, 70 years, especially with elderly customers. And it just shocks me how fragmented our data is. And then we talk about moving towards better tech, including AI adoption. AI, its foundation 101 is clean data. It's clean data and understanding your risks, your systems, and where to deploy it holistically. But without that holistic oversight, which many organizations currently don't have, you're dead in the water to start with. And that's why 62% of AI adoption is failing, is because of that lack of understanding of where to start in the AI build. So I couldn't agree with you more. We're at a completely different stage now than where we started. One of the things that always makes me laugh is when you do training on money laundering, and it'll say money laundering and terrorist finance training. Let's say 100 slides, 99 of them will discuss money laundering. There'll be one on terrorist financing. And then the question is, well, why is that? It's like, well, terrorist financing is reverse money laundering. It's mostly from completely legitimate sources, and it's through people's belief system. So how are we supposed to understand where they're withdrawing their money and putting it? Okay, great.
I think possibly a lot of the time, historically, given, as I said, I've been doing this for 25 years, as you said, there is a little bit more holistic sort of approach to things now. Historically, everything was siloed. So you had an anti-financial crime department, you had an AML team, a sanctions team, and at the best of times there was probably fragmentation in the sense that, as you said, there was ample amounts of data available, but there was just a reluctance and or an inability to share that information. Sometimes what I found is that the information is available, it's just that we're not actually utilizing it properly, we're not sharing it. So I do think there's a responsibility within the broader function to understand what products do you have, what services do you provide, what jurisdictions are you working in. You mentioned about risk. It's just that idea of once you understand all of those particular areas of your business and you look at it from a risk perspective, you can start to incorporate the various things, whether it's AML, sanctions, bribery, and corruption, because once you've risk-based it, there's going to be certain jurisdictions or certain products that there's a heightened risk associated with them. So you can deploy your resources more meaningfully, if you like, across the landscape.
But one of the things I'd like to touch on is on sanctions. Most of our sanctions exposure nowadays is not direct exposure, it is secondary exposure, in particular through complex networks. And many of these networks, in particular kind of relationships and close associates, we're not even able to identify that with existing screening systems because it's 2-3 degrees of separation. Do you have any kind of examples of best practice that you've seen maybe organizations could use or utilize to better identify these kind of secondary sanction exposures? Because that's really what's hurting organizations at the moment.
I'll go back to the point that I made at the very beginning. Sanctions historically was very much about name matching, for example, and where you have a sanctions analyst that's involved in that particular role now, they can certainly look at something from a name match perspective, but that's about a list, and I think that it's incumbent upon all sanctions and sanctions individuals to not just look at a list, but to look at the actual network. So I think it's actually, you mentioned about the network, so you're not looking at a specific individual, but you're trying to understand the narrative behind the individual. Whether there's a system on that, AI is developing all the time, behavioral analytics is
the only way we're going to be able to do it.
Correct. And I think because a lot of the times now transactions are so complex, sanctions rules and regulations are so complex, not just in one jurisdiction, but if you've got this global business model that you're working on, you've got sanctions, regulations and legislation on a global basis. And so how do you then look at how do you incorporate all of these different jurisdictions and the rules and the regulations.
I was about to say, try saying that fast.
I nearly did say it too fast.
It's brilliant.
But I mean, I think it's I suppose to go direct to your question, sanctions analysts are now required not just to carry out an administrative function within the department. They are required to be analytical. They're required to be inquisitive, ask questions, explore, detect. And again, it's not looking at just the individual. It's looking at the narrative behind the individual. Is what they're doing normal for that particular member or that particular customer? Are they actually doing something that this is extraordinary for them? This is not, and we know that there's practical examples of where a specific transaction is being executed, and we know that transaction shouldn't actually be happening. But it requires the inquisitive mind. It requires the person being enabled to put their hand up, ask questions. Does this look right? Is this right? What should I be doing with this? And I think if you have that open communication within your department and within your organization, all built on collaboration and information sharing, I think you will serve the member better or the customer, and you will serve your financial institution better.
I always make the joke that you'd have to be an idiot to open a high risk account if you want to launder money, because it's true. But it is true, and yet we invest so much time and energy kind of risk rating customers, and the truth is, I actually had a really interesting discussion about PEPs the other day, actually yesterday, where thematic reviews of various regulators are happening at the moment, where I think they've called PEP risk management lazy risk management, because most organizations, it's if you're a PEP, you're automatically high risk, instead of looking at the taxonomy of the risk, inherent risk within the different domestic, international, and then obviously what types of PEPs they are. And you made the point earlier, you mentioned it is about this inquisitive mindset and asking the right questions. And I think historically, I don't believe that risk professionals have been empowered to actually do this. They haven't been empowered to think a little bit more outside of the box. It rather has been a game of, well, this is what the regulator says we have to do, so that's what we should do. So now, and even earlier today, we talked about clients officers having that, without sounding cheesy, that curious mindset and asking those questions, because, without repeating what I mentioned earlier today, was many times it's not all the boxes can be ticked, but it's about that kind of spidey sense, that kind of, if there's something that doesn't taste or smell right, own that and use that, because in those cases, I can guarantee you're mostly 99% of the time right, that there isn't something.
Yeah, I think it's a good point, and I think that, who doesn't love a risk assessment, right? Everyone loves carrying out a risk assessment.
I love doing a risk assessment. I'm sorry. I believe it should be a living document.
It should. I agree with that.
Oh my God, I love a good risk assessment.
I definitely love a good risk assessment. I think where we're moving in terms of risk assessment is, and maybe this sort of goes some way towards addressing your point, is risk differentiation. So I think sometimes what ends up happening is you've got this risk blanket, and you've got an individual that sits behind that, carries out the risk assessment, and there's very clear, definable lines within which to operate. And so you're going to have maybe a risk rating, that's the output from that particular exercise, but at what point does the analyst or the individual that's sitting behind that actually take the perspective, actually there's a risk identifier here that is a differentiating factor. And I think particularly when you come to PEPs, why should it just be high risk? Again, risk differentiation would dictate that you actually carry out the assessment, and so you make a call on that particular PEP. So risk differentiation, say that fast.
Go ahead.
All these words.
Risk assessment.
Makes sense. How about looking ahead? We did touch earlier, I think, machine learning and AI, so I'm going to have to bring this up because it's coming up a lot, and at the event today. So these tools are becoming more common in AML sanction screening. What governance responsibilities should institutions prioritise to ensure they don't lose transparency, auditability, another long word, and effectiveness? What are your thoughts?
Actually, just when you talked about AI, because you made me think of it earlier in terms of, I love a good stat, that do you know how many data points we get on a customer at onboarding? At onboarding. Do you know how many data points we get?
Oh, no.
1,200.
Oh, okay.
Do you know how many we use day to day?
100.
Exactly.
That was a guess.
That's a good guess. Yeah,
You win a boo-boo. That's what we're giving it today. Points me, Brian.
Yeah.
But it's and the reason I mention that is it's flowing naturally into the AI discussion.
Yeah.
Could you imagine that you used those 1,200 data points at the very inception of your relationship, and that then carried through to looking at the behaviours and analysing the transactions and activity within your client's account? That will be a game changer in terms of knowing your customer. But the truth is, we currently are drowning in paperwork. Onboarding, in my opinion, currently KYC without digital identity is a waste of money. Why? And I don't say this in a bad way. I think obviously there's an importance to it, but you come into an organisation to open an account, you tell me who you are, and based on your risk factors, I've risk rated you. I've basically risk rated you based on what you've told me, because unless you're high risk, I'm not verifying anything. I'm just going to go. So, and I'm hoping that the passport is all checked out and everything is passed. So on that basis, you're going to be lower media risk. And then you start operating your account, and you're never really going to be within my view, because my purview is going to be focused on my high risk customers. And that's the game changer for me for AI, because you're no longer a needle in a haystack in a low and medium risk. Everybody is going to be treated in exactly the same way. No longer will people be bucketed, scenarios, rules, systems, and I'm just so excited about it. I find this to be one of the most exciting intersections in development for how we protect our organizations and understand our customers moving forward.
Yeah, I mean, AI is definitely the future. I've always said this in terms of data, and the caveat is that you can never replace human judgment.
Never.
And so I would say that AI is meant to be used as a tool to enhance the process, so it supports the individual. I always say, you can outsource certain elements, but you can't outsource human judgment. You can structure it, but you can't outsource it.
I think you're absolutely right currently, and I think probably for the next 5 or 6 years. But in all honesty, the current AI models that we're seeing in the compliance space predominantly are large language models, which are actually the way they're built currently is just semantics. Like they're not intelligent. They're literally just taking text and then interpreting that so that we can review it. So it's always a human in the loop, and you could argue that if there's a human in the loop, how is that artificial intelligence? Because it's not intelligent. So I always say, like, if you're using an LLM in its current format, you don't have AI. But the challenge we're seeing in the industry is there's a massive run for everybody wants AI, and we have 62% of failures on AI adoption, and the reason they're failing is because one, what's your problem statement? Well, the CEOs, I want AI. When do you want it? Today. Why do you want it? I don't know. Secondly, the data. Neighbor has it. I heard at a conference. The second part is that the data. We haven't even understood our problem statement before we've adopted a solution, which is absolutely nonsense. Let's like somebody going to the doctor, and the doctor says, "Well, why are you here? Are you sick?" "No, I'm not sick." "So what do you want?" "Well, I'm not sure, but I know I'm going to get sick, and I know that there's something wrong with me." "Well, where is it? Your foot?" "You're like, I don't know." So let's just start somewhere, and that is. It sounds crazy when you say it like that, but that's what we're doing with AI adoption at the moment.
I sometimes think that this adoption of AI, it does remind me a little bit of when we started to adopt technology to begin with, because I'm in the business long enough to remember having to do my sanctions checking with paper lists. And then all of a sudden
mapping the weekly regulatory updates.
and they were coming through on the mail. So I do remember that, and so I feel like there's a little bit of a cyclical type response happening now in terms of AI, and it's almost like the same parameters exist, i.e., what you're putting into the system is what you're going to get out of the system. What was the adage we used to use? Bad data in, bad data out. So it's a little bit like garbage in, garbage out. So it's a little bit like that now. How do you start your AI? What are you putting into your AI? Is there a team of people responsible for your model validation, for monitoring and checking, validating that actually, what's going in is appropriate for your circumstances? And again, the questions that you're asking are, what products do I have? What financial services am I providing? What jurisdictions am I in? Are you designing the system in a way that actually it's not a global template that you're just whitewashing? It's actually tailored to your specific business. And with that, the output then gives you the opportunity to make an informed decision.
Mm-hmm.
Again, it's that
Yep.
it's that judgment piece that sits with an individual as opposed to the AI side. So
I saw
Yeah.
some incredible best practice the other day from a leadership perspective in this space in terms of preparation for good AI adoption, and it was actually strangely with the Mauritius Telecom, where they brought over a new CEO who's Mauritian but lived in Singapore and worked in Singapore his entire career. And what he has appointed within Mauritius Telecom is data accountability managers. So with every department will have somebody that owns the data for that department, so they become accountable for it. And it's the first step in a holistic data cleanup exercise. And I just said, I love that. Like, I love that accountability, because too often we have a lot of data in our systems and think, well, who owns the data? It's not mine.
Right.
It's not mine.
Yeah.
Nobody wants that hot potato. Like, they're throwing that around the room. So that was a really beautiful example of leadership saying, well, look, accountability is the first step in successful change management. You're going to own the data, and then we're going to start. And it wasn't. I'm not saying that the mess of the data is your problem.
Yeah.
But cleaning it up is collectively our problem, and I want the departments to become accountable. And I thought that's a really great way to start.
Yeah, I think that goes directly back to your question. Your question on transparency and your question on accountability, auditability. I think if you have transparency and you have a fully incorporated view of what data you have and how you're using it, but also, as you said, accountability. I mean, that's huge. I mean, oftentimes there's vast amounts of data and there's nobody accountable for it, and there's actually data that's been collected that's not being utilized. It's under-resourced data. And I think finally it's the audit piece, because and I've always said this, and I'm probably going to say it in the presentation a little bit later on. It's not what you know. It's not what you know, it's what you can prove. And so, you've got to have that audit trail. So even if you're leaning on technology, you're leaning on AI, and you have your transparency and your accountability, you still need that paper trail, and that's your proof, that's your evidence.
It's also your first step on explainability. It's, in all honesty, the regulator doesn't expect a head of a compliance or compliance officer or even a CEO to be a tech, a tech expert. But what they expect to understand is, okay, so how are you using the input into the system to obtain, what is it your expectations and output, and how is that working within the system? And being able to explain, well, these are the data sources. This is why this data has been cleaned and collected. This is what we're putting into the system to try and achieve. This is how we understand the system works. And from an output perspective, this is what we are hoping that it will be achieved. But again, we're continually refining and developing. And as long as the regulator can hear that narrative and that kind of explainability, you're going to be fine. But if you just say, oh, we bought this system because we want to do this, the regulator will spontaneously combust in front of you, which is not a bad thing either. One more down.
Yes. I do think, again, sort of looking back, institutions were very reluctant to engage with the regulators, where, I think that's a significant step forward, where there is a lot of engagement and collaboration between various regulators and businesses. And you're quite right. I think, again, it falls into that transparency bucket. You're collaborating and you're speaking with the regulator. But also, I think, regulators are not coming into your business to run your business. What they're doing is they're asking you to explain to them what it is that you're doing. And I think you need to be in a position to explain what you're doing and how you're doing it. And it's that idea of, if you've made a decision, you're able to rationalize that decision and you're able to support that decision. And you do that using AI, using technology, using, because I say you need to invest in technology, but you also need to invest in people.
Absolutely, One final question, Brendan. But fantastic, really good, great insight actually for the audience out there. We always like to finish on rising stars or professionals within the industry, or newcomers coming into the industry, I guess. So those working perhaps in smaller or mid-sized institutions, so who are wanting to step up their program. What are your top 1 or 2 priorities to get right, let's say, without perhaps those with huge budgets of large, perhaps global banks?
For the individual?
Yeah, potentially, yes.
It's a really good one. I think for individuals, focus on whether it's AML or whether it's sanctions, but get a view of, I suppose, the world that you want to work in. I think that it's really important that they are, I think the better analyst, if you like, if you're starting off, is somebody that has the technology expertise, has the subject matter expertise, but also, and I think you mentioned this, just feels enabled and empowered, because I think when you're starting out at this, whether you're in the boat for 1 to 3 years, for example, you're actually seeing things every day. You're probably in the best position from the financial institution's perspective to see something. And it's that idea of, being empowered and being enabled to actually lift your hand and speak up and speak out. So I think, technology and subject matter expertise and just the ability to speak up.
And I think without empowerment, people can become complacent. And it's like, well, I know there's an issue. I know this doesn't work well. I've raised the issues before. Nothing's been done about it. So either I'm just going to live with it, or I'm going to vote with my feet and go out the door. And you want your employees to be empowered, irrespective. It's one of the things when I worked at ING, the Dutch bank. Everybody in the room had a voice. Everyone, and that was just so powerful. It didn't matter how junior or senior you are. But then I've worked in other organisations, and culturally, there is a hierarchy of, contribution to the conversation. That should never be the case, because, everybody brings something to the table and a new set of, insights and opinions that you may not necessarily have, because, we all haven't had the same experiences.
Exactly,
It's a cultural mindset.
Exactly.
It's a cultural shift. Where you'll if you do that cultural shift, you'll have people speaking up.
Yeah. Oh, thank you both so much. Thank you, Brendan, for being here with us today and sharing your insight and expertise and wealth of experience. And we look forward to Brendan joining us later this afternoon as well. And Una is about to also hop off up to the stage as well. But massive thank you, Brendan. It's a pleasure. Thank you. Thank you so much. Thank you.